Good evening, all. Hope you're doing well. You have a nice weekend, and hopefully the COT data was useful as well. It looks like we might be setting up for a trap on the Euro USD if you watch that video. So be careful around the dollar. We've got a light calendar this week. We've also got a possibility of a 40-day ceasefire as well in Israel and Palestine. The condition is that the Israeli PM doesn't attack Rafah. So if he sticks to his word, and then it's looking likely that then I'll have a gradual reduction of their presence, and then the Palestinians can go back and start rebuilding. So in those 40 days. But the key thing is that he doesn't, he doesn't send any rockets towards the Rafah city, because that's where all the that's where everyone's gone to flee. And so it's going to be a humanitarian crisis of extreme proportions. It's going to be like a modern day Holocaust if he does that. The CIA director is involved, and you've got Blinken as well. So he would be foolish to do anything. So it's looking likely that we might get some peace there, because the Americans have got a very, very heavy presence now over there, and he can't commit that atrocity. If he does, then he's going to be arrested, and it's potentially, it could unfold into a very risk-off event, or he sticks to his word and he comes to an agreement, and there is going to be some peace talk. So the issue is that's where everyone's gone to seek refuge, and we're talking like 1 million people, civilians. So potentially we could have a big risk-off event this week. So bear in mind, you can't ignore that stuff that's going on. But if we have a peace talks, it's going to be good for risk appetite, really. Okay, so that bearing in mind, we know we've got potential risk on scenario, or a very, very risk off scenario. So we could like flip on the coin a little bit. So you've got to be careful. It's really, really important. This week I'm going to be taking it quite easy with the trades. I'll be around obviously, but I'm not going to be placing like large trades because the whole thing is a little bit uncertain. However, we've got a lot of green on our risk calculation with euphoric, right? So the indices absolutely went parabolic. The thing was on FOMC and the Powell speech, he was saying that they're going to be more likely going to cut than hike. And that sent the dollar down quite strongly, and risk appetite continued higher. And then the market was looking for the NFP, which disappointed, but it was expected to be a bit lower than forecast, and it wasn't too bad, to be fair. And then we carried on pumping. Now, one of the reasons why we carried on pumping is that the herd went very, very bearish for some reason. I'm not entirely sure. It could have been the FOMC, and they went short, and they're just going to hold. So we've got a lot of green, okay, so bear that in mind. And also we've got a little bit of softness in the dollar, which leads into a little bit of a risk on scenario. And also of note that the cross yen are sells, they're going towards sells, okay. So we may be risk on with a strong yen. Now, if you've been trading for a long time, that is a strange sentence because the yen is a traditional risk off indication. However, we could be risk on with a strong yen. So we've got to be careful. So if you're trading yen, it might be breaking away from its fundamentals, and you might just want to look at the sentiment and the technical. Okay, so you could be you could be placing trades based on the fact that we're going very risk off. So you think that the yen to strengthen. It might not be the case, and we might see a breakdown on that correlation. I guess it would help if we went really risk off. The yen would then go back to its traditional conventional risk off role. So that is a scenario, but there is a likelihood where we're going to have like a divergence on that risk appetite. Okay, so possibly going to throw a lot of fundamental people. It's going to be like a curveball for those fundamental traders. So it might be an idea to look at technicals and your sentiment. And also don't forget the supply and demand indicator and trading view is fantastic for that. We're also checking out a NES indicator that was supposed to be very good with the FX SSI indicators. So I'm going to be testing that this week. And I want to get like a system built around that. And so once I've got some good results, and I'll feed back to you guys. So I think this week I might be taking it fairly easy with the trades, and especially we may be flipping on the risk appetite as well. It could be absolutely huge, and yeah, it could be the start of something really crazy if he does send his troops or send missiles and all those people die. So it could be very, very massive. So you've got to be really, really careful. This will impact the greater big picture. Okay, so got to be careful. So I've spoken about the yen, also the dollar, and I guess we can look at the cut data we covered this morning. QDB scores. Yeah, so we can see Euro CAD's got a good score, Swiss yen, Aussie, Kiwi, Aussie USD, the Euro USD, Pound CAD. So we're looking like a little bit of weakness in the dollar, a little bit of weakness on the CAD. It looks like that way, and a little bit of a strengthening on the yen, which we can see on the QDB scores simplified. So we can see CAD is actually quite bearish to start the week, and the yen has come off quite a bit. The yen was down here, so we're currently seeing a bit of CAD weakness, yen weakness, but then that's been weak for ages and ages and ages. So, but the thing that's come off its lows, so want to be careful with the yen, and the dollar is also weak. Pound is going to be a bit tricky because we've got the central bank monetary policy statement and their press conference, and they'll have to give us some idea about what they're going to do with the pound, and they're going to hike or cut, and also the inflation is going to talk about all of that kind of stuff. So the pound's going to be tricky this week. We've got an RBA interest rate decision as well, so be careful with the Aussie. This is on Thursday. This is Monday night, I think. So you could be careful with those two. A bit of strength from Swiss, Euro, and New Zealand dollar. So you could theoretically look for New Zealand dollar CAD or Euro CAD potentially, or Swiss CAD. With the yen, I'd want to be a little bit careful, and also with the USD, because we can flip quite suddenly in risk as well. So I'll show you the indices, and there's not much to say about the robot. We had a really good day on the aggressive robot, and it was an okay day on our passive bot. So this week, doing lots of testing on that, and we'd actually made £1,080 on Friday on a £10,000 account. So we obviously were quite over leveraged, but the profit was fantastic. If we reduce that by, if we reduce it, the lot sizes or the regularity, then even so, if we get £108 a day, that's amazing. 1,080 is fantastic. It's just a bit too good to be true. And of course, with the fact that we're so over leveraged, if we have some kind of crazy event, and it's going to be quite bad for us with our aggressive bot. So we'll just have to carry on testing. If we have a sudden crazy horrible event that goes risk off, it could be very bad for our aggressive bot. But on our passive bot, it'll be absolutely fine. So it's a case of getting the two and try and get a middle ground between the two robots. Okay, so while the aggressive bot can make us a lot of money, if we have a crazy risk off event, suddenly we could be down a hell of a lot of money. So it's probably not ideal. So that's that. Okay, so what with the S&P is that they'd sold very heavily, and because of that, we've really pumped. So it's no, that's the reason for the pump. It's not like the reason, but it's a very good reason for the pump. Like I said at the top of this video, and they'd really aggressively sold, and up we come. So that's that. US 30. It's kind of frustrating because we want things to fall in order for us to get the dip. Okay, but they're holding on and they're shorting. Okay, so we've got to be patient. We have to wait for these guys to get wiped out. So we might have to continue a little bit higher, and then hopefully they get out of the casino. So it sold. Horrible move, absolutely horrific move. It came to the supply, which was created there. They've gone long, so price fell, and there had to be an entity to sell it. They put their sort of like a footprint like their seal of approval. This is where they've come in, so fair enough. We created a supply. That's an institutional supply because the herd, the dumb money, the small fry had gone long. Down we came, up we come. Resistance, overcame that resistance because we created a new demand for named selling. So institutional demand, and up we come, which is what they want. They want things to go up higher, and if they can trap, then even better. And then I guess you can probably imagine what this with DAX is going to be similar, isn't it? It's sold here, although it hasn't really done much. So DAX could be worth watching. I think maybe tomorrow, and see really that kind of aggressive selling. We should be seeing price propel higher. So it could be under some fundamental pressure. Okay, so that's the indices and gold. And gold has been a little bit tricky. Oh, okay, it's this historical SSI is not available, so that's fine. We may have just caught this video in a good time. It could be that FXCM are doing something with the SSI data and they're refreshing it or something. So this is a good conclusion to the video. Be careful because that's stuff going on and there's a potential peace deal going on. If so, it's going to be really good, and people can resettle and rebuild, and there's not going to be any more massacre, and hopefully there'll be peace, like a temporary peace at least, is better than this continued war. And it's just not a good situation to be in for them and for us, because we're trying to, although we like volatility, we don't really want sudden like flips, and that's, it's bad for our trades because we've identified our risk and reward. However, a crazy risk event comes out, it can come down to our SL quickly as well. So we've got to be careful. And our robot's going fine, which we can continue testing, and that's it. So there's so much to talk about, but I don't want to make it a long video because we could talk about the COT data. We could also talk about the correlation analysis as well. This is leading into dollar weakness because what we're seeing, if we look at yen as a proxy, we can see that the dollar is holding on to the euro yen. So if that euro yen breaks away from the dollar yen, it's telling us that the yen is trying to break away from the dollar. Okay, so obviously there's something going on there which is leading towards yen strength and dollar weakness. Because of that we're seeing these breaking away from the dollar yen. Okay, so that could be dollar weakness. So lots to talk about, like I say. Any questions, let me know. If you want to join us, you're more than welcome. If you need me to help you with the sheet, let me know. And I wish you a great weekend, and I'll be back Tuesday. Okay, so I'm not around tomorrow. I'm off completely. Okay, so have a great Monday. Trade safely. I'll speak to you soon. Risk disclaimer, for anything that you do in the financial world is that you will need to use very strict risk management. So if you don't have the risk management in play, you're pretty much gambling, okay? And we really want to be looking at trading, and we want to be looking at risk to rewards. And in order to get a good reward, you need to define your risk. And if you don't know where your stops are, if you haven't defined your risk, then you could end up losing all your capital, okay? So you need to know where your exit is, and then by knowing that, then you can forecast your profit. But if you're entering willy-nilly based on some information that you found on the internet, and you've entered without knowing where your stop is, you're going to encounter huge losses. So just to say is that it carries a huge level of risk, and it may not be suitable for all investors, and past performance is not indicative of future results. Okay, so it's a quick disclaimer there.